Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Markets continue to climb a wall of worry, and that will likely continue. Brad McMillan, Chief Investment Officer of Commonwealth Financial Network, joins me to discuss. Brad, it's great to see you as always. Welcome back to Trade Talks.
Thank you for having me, Jill. Always a pleasure.
You got it. And you've been consistent with this theme throughout the year. The economy, it continues to remain strong. Consumer looks good here.
You know, what's interesting, Jill, is we've heard a lot about how the job market is getting softer, and that's true, but it's still running at a rate that prior to the pandemic, we would have said was absolutely great. You know, we've seen consumer confidence go down, but now it's bounced back to the highest level in 2 years. And when you look at what's going to derail that, there just isn't really anything out there. So I remain pretty positive.
Let's talk about inflation for a moment here, because even that data continues to improve. I mean, anecdotally, I don't necessarily feel like gas prices are up 20 to 30 cents over the past week or two, but the data continues to come in and show it's softening a bit.
It is softening a bit. A lot of that, I mean, to the point you just made, you're 100% right. A lot of the drop has come from energy. So the headline probably isn't really reflective. But then you look at the core numbers and they are coming down. Things are getting better. And a big chunk of that is housing, which is also going to come down. So even if we see energy or gasoline go back up, we've still got an improving trend in place. And I think that's good news going forward.
Let's talk about the Fed for a moment here. What are your thoughts in terms of higher rates for longer, perhaps another rate hike towards the end of the year? It doesn't sound like they're telegraphing cuts by any stretch, but higher rates for longer, do you think?
I do think higher rates for longer. And I think the question to ask here is not when are they going to cut rates, but why would they cut rates? Remember, they have a dual mandate here. They've got employment, which is fine, and inflation, which is still high. They have no reason to cut. So I think that they're not going to cut probably until next year, maybe longer. And in fact, I think more increases are quite possible.
So if you think that the market's going to continue to climb this wall of worry, I mean, the same concerns that we see in the second half certainly existed in the first half. What sectors would you favor with this backdrop?
You know, it's remarkable. The strength in the market has been really surprising, but I think energy has been given up for dead. I think there's some opportunities there that we really need to pay attention to. Yes, you know, oil went down, but it's starting to show signs of coming back. You know, and similarly with financials, certainly there have been some challenges there. Been some big challenges, but with interest rates higher, they can harvest that spread. And if the economy keeps growing, they're going to have business development opportunities as well. So I think both of those are definitely worth a look.
What about industrials? I feel like this is such an interesting space. Not only do you have the core industrial story, but it seems as if a big part of the narrative here is how they're transitioning into digitization and innovation and really leveraging tech to move into the next couple of decades.
I think industrials are absolutely going to be in a great place, probably in another 3 to 6 months. When you look at the manufacturing surveys, you can see that we're starting to bottom on sentiment. So that typically is followed by a recovery in business activity. And I think we're going to see that in the markets, just not yet. To your point about how they're going to be better able to take advantage of mechanization, it's not just that. It's the reshoring that the Inflation Reduction Act is driving. We're bringing a lot of manufacturing back to the United States, and that's going to be nothing but opportunity going forward.
All right, Brad, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.